get today's edition of Frontier Open Bell started with our panelist, Luke Ofojebe, who is the head of equity research at Vertiva Capital Management, and Alikan Sacho, CEO at Rich Frontiers Management in Nairobi. Thank you, gentlemen, for coming through this morning. Let's check it through quickly. The equities markets on the African continent on Thursday, the Nigerian market finished around 0.1%. We got a bit of a green shoot in the BRVA market, the Nairobi stock market about 0.4%. The GSE fell 0.2% after a very soft 0.05% the previous day in the green territory. Egyptian market off track by 64 basis points, went to 10,000 on Wednesday, lost that on Thursday, which is the final trading day of the week. Today is the start of the weekend in Egypt. Let's go to the East African markets to check through a couple of news. The new budget for 2020-2021, 3.6 trillion. How will deficit be financed? Ali Kansacho will give us a sense of that. We have two new directors for the Nairobi boss, Steven and Donald. We congratulate both of them. State Bank of Mauritius is paying 400 million shillings in tax to the Central Bank of Kenya interest rate-free loan. Safaricom has floated an eSIM service ahead of its opening of her business in Ethiopia. And Uganda's exports to regional markets, South Sudan, Kenya, and others were down. And Japanese retailer Miniso opens his retail shop in Kigali, the Rwandan capital. Ali, let's get with the big news around the budget. Why will the Minister of Finance fund this?
Yes, so good morning, Boss, and good to see you as always. We had four budgets yesterday. We had Kenya, Tanzania, Uganda, and Burundi. And, you know, Kenya obviously in terms of scale outmatches everybody. So let me just run you through some key metrics. Spending plans of $27.8 billion. That's excluding debt redemptions. 383 billion shillings in infrastructure, energy, information, technology projects. 142 billion will go to President Kenyatta's Big Four program, which is the health system, manufacturing, housing, and food security. He's talking of economic growth of 6.6% for this year, and basically narrowing the fiscal deficit to 7.5% of GDP from an estimated 8.7%. This comment caught my attention from Nikhil Hira, who was previously a tax partner at Deloitte, and he said the concern, though, is that the government is looking to finance its deficit through an already beleaguered taxpayer rather than looking at controlling expenditure. Obviously, there's a lot of borrowing that's being factored in. It's been helped by the IMF program, because the IMF program essentially would allow them to do a Eurobond in pretty short order. We expect that to happen in the next few weeks. And also it gives lenders some comfort. But, you know, I think I've got a number of issues with the budget, Boss. One, I think 6.6% GDP growth is way too optimistic. You know, I just don't see how that plays out, because you've got a tourism industry which is on its knees. You've got continued uncertainty with COVID. You've probably got on-off curfews for the rest of the year because of our vaccination rates. And, it very much feels like we're running just to pay off our debts. I mean, over 60% of government revenues is just going into debt to servicing and debt repayment. So it remains a very big challenge. Tanzania, at a glance, much more conservative, a lower budget deficit. I'm quite impressed with that budget, to be frank. And Uganda is the only country in East Africa which is actually trimming its expenditure plans, which I think is what all of them should have been doing. And therefore, you know, I was quite impressed with Uganda in the sense that I think they're being more realistic. They're talking of 4.3% growth. Tanzania is talking of growth at around 5.6%. So it's a bet on growth, essentially, is the way I'm looking at it. These three countries are betting that, you know, growth is going to return, revenues will therefore start to improve. But, you know, I agree with Nikhil that we've got a very, very difficult situation. We've been in recessionary conditions last year. The taxpayer is under tremendous pressure, and, you know, to expect them to churn out more cash is not going to be easy. Reminded me of a quote by Dennis Healy many years ago when he was Chancellor of the Exchequer, and he said about the rich were going to make the pips squeak. And I think, you know, the taxpayers are being, you know, the pips are squeaking now. It's not going to be that easy to achieve what I think is really an optimally positioned budget for growth. To get to your other headlines quickly, State Bank of Mauritius, of course, was one of the banks that stepped in, and in fact, they bought two underperforming banks, Fidelity and Chase Bank. And in order to encourage them, this has been the central bank's strategy for consolidation of what were very many banks. They essentially been giving very cheap loans to these banks to encourage them to consolidate. And State Bank of Mauritius was a recipient of one of those loans, and the KRA has come after them and said, look, you know, you're getting it at 0%, and there's been a tremendous benefit, and therefore slapped them with a $4 million tax charge, which I think is fair in the circumstances, so I've got no issue with that. Uganda exports to regional markets dropping, that's Kenya, DRC, and South Sudan. You know, Uganda exports a great deal of food to these markets, so it's interesting. And I think it just speaks to pressure on the consumer in those countries, which has probably reduced demand for Ugandan exports. What was interesting, of course, was, you know, the size of the gold exports out of Uganda. The latest data point I saw from the World Bank Uganda report spoke of gold exports exceeding every other export by a very, very big margin. And, you know, the question is, there are some gold reserves, but one would have thought that is gold coming out of its neighbor, DR Congo.
Interesting headlines across the East African coast. I'm sure the Safaricom story will continue to play out as we saw that very big telecom privatization market opening from East Africa and Kenya all the way to the Horn of Africa, where Ethiopia is making the headlines right now. We have quite a bit of headlines from Nigeria. It's the season of third quarter earnings forecast from insurance and other companies. As Luke will take us through this week's marketplace and see how these earnings forecasts are playing into investors' expectation. Ghana's inflation is by about 1% to about 7.5% in May. That's far below Nigeria's nearly 20% inflation. Senegal's 1.3% inflation year-on-year rise in the month of May. That's at the bottom of the single digit. Luke, coming here with this Nigeria's headlines, in particular, those three third quarter earnings forecasts, what does it really mean for investor sentiments? Are they strong enough to weigh sentiments on the positive side?
Good morning, Bosen. Yeah, so for one of the headlines, here we have that Fidson Healthcare proposes final dividend of 25 kobo for FY20. This is quite good for the market. It's also good for the shareholders of Fidson in particular. I mean, looking at their performance in 2020, we noticed that revenue was up about 30%, and that shouldn't be surprising given the fact that Fidson is actually a company in the healthcare sector. And because of the pandemic, we saw a higher demand for their medical products, and that was what propelled revenue to rise by 30% last year. As a result of that impressive growth we saw in turnover, the company's profit after tax actually tripled from about 400 million naira in 2019 to about 1.2 billion in 2020, and that was what led to the declaration of a final dividend of 25 kobo per share for FY20. And going forward, we expect to see, impressive performance as well, given the fact that, business activities are now improving. Consumer spend might improve slightly compared to what we witnessed last year. And also the demand for medical products should still remain strong, even this year, given the fact that vaccination rates in Nigeria is still very low compared to other emerging countries. So on that basis, we still expect people to continue to stick to social distancing, making use of hand sanitizers and all that. And that should continue to support Fidson performance through 2021. Therefore, consolidated Allmark Insurance, the company sees gross premium to improve to 7.92 billion in the third quarter of 2021. I mean, this is also a reflection of improving business activities. We understand that the insurance sector actually took a big hit last year, especially in Q3 and Q4 last year, also Q2, given the fact that that was when we actually felt the impact of the pandemic the most. So for a number of companies, they could not meet their premium obligations during that period. For them, it was considered more like a luxury. But going forward, given the fact that the economy is now reopening and is getting closer to pre-pandemic levels, we expect to see improvements along this income item for a number of insurance companies, consolidated Allmark included. And I believe that was what informed the management's projection of about 7.92 billion in the third quarter.
Oh, thank you so much. Ali, let me ask you, Luke, just kicking the Ghana inflation for me very quickly. What's your take on that? At 7.5%.
So looking at the Ghanaian latest Ghanaian inflation figure at 7.5%, still a reflection of slowing food inflation, basically, because we are seeing an increase in commodity prices for the country due to the increase in PMS and a couple of other commodities as well. Whereas for food, it's been more of food prices have been slowing in the country, and that was what's really led to the slowdown we saw in the country's inflation. However, if oil prices continue to remain at these levels for the rest of the year, or even rise much higher than these levels, then we might see inflation picking up in the second half of the year.
Thank you, Luke. Let's cross to Southern Africa very quickly. Ali, you're going to tie that very quickly with some of the issues in Southern Africa, because the story around Ramaphosa's now allowing companies to produce 100 megawatts power without electricity, without license, looks like something we could use in Nigeria here. How do you respond?
Absolutely. I think, if you follow the unhappiness of the average South African about Eskom's blackouts. I mean, one friend I follow, Ronak, he said there was a blackout for 36 hours. Now, this is not possible in an economy like South Africa's, where you're trying to compete globally. It's just a disaster. And I think what this Ramaphosa announcement speaks to, and I think it's a clever move, is just saying, look, as government, we can't fix it. If you've got a private sector solution, come and do it. And, when you've got an environment where people, I'm sure, would pay a good price for power, I think it's going to be a catalyst for increased power generation. And, it's no longer about oil and gas, right? It's about solar, it's about wind, it's about all kinds of solutions. And you can provide solutions down to the household level. So I think it's a major announcement. I also saw another announcement that South African Airlines has agreed an investment by a private equity group who seem to be already operating in South Africa with a low-cost airline and a small airport. So that's another good development, because certainly if they want to reinvigorate the tourism sector, they have one of the biggest tourism businesses in Africa. They're going to need an airline at the end of the day. So that's another positive development that I took away. Overall, the concern for me is, South Africa has now officially entered the third wave of COVID infections. Yesterday, we saw infections just shy of 10,000 a day. Peak infections were about 22,000. So you're getting up, we know what this virus is like. It's very exponential. Once it starts rocketing, it goes like a rocket. So that is the concern as to how that plays out and how they manage it. Because if you look at the underlying data, there's been a pretty good rebound in the South African economy, obviously comparing it to a low base, but you've seen exports pick up, the deficit has been sharply lower, the rand has improved, so you can see things coming together. We just hope it doesn't become unstuck because of a third wave of the virus. Other than that, Delta Core Zimbabwe raising alarm on the auction FX rate disparities. Look, this has been a bugbear of the president's office. It's been a bugbear of the corporates in Zimbabwe. I, for one, think they should give up on these. They should just go for one unified rate and be done with it. But for now, obviously, there is still a scarcity. But we need to keep an eye on that, because that's one of the big policy-making reforms I think they've got to undertake if they're going to build on what looks like a tremendous agricultural-based recovery for that economy.
Thank you so much, Ali. Look, very quickly, on electricity, do you think we can photocopy President Ramaphosa's mindset when it comes to allowing independent operators to do up to 100 megawatts without even getting a license?
I mean, Nigerian governments can, to a reasonable extent. I just think right now, what the Nigerian government is really trying to do is to ensure that we don't have these private companies owning 100% stakes in these distribution companies. That has been the gameplay since the sector was privatized in 2013. And I think that's what South Africa is also planning to do. They are planning to adopt the model of the model power here in Nigeria, whereas we are going to have the distribution companies, the generation companies, and the transmission company. But the fear of South Africans is that that can lead to loss of jobs if private companies should take over ESCOM, and because private companies generally they want to drive efficiency and all that. So that might lead to loss of jobs. But here in Nigeria, I mean, that's what we are already doing. The only problem here is the fact that we have infrastructure challenges. Private investors are not willing to invest more in the power sector because of the subsidies still in place. I mean, you are talking about a country where at the moment, even the fact that we've seen like an increase in power tariffs, but these current power tariffs are not really cost reflective. They don't reflect the expenses that these distribution companies and the generation companies actually incur on daily basis. And that's why we need to push more for a deregulated power sector, whereby we can see more investments being channeled into that sector. I mean, to put it in context for you, we have installed power capacity of about 14,000 megawatts. But the transmission capacity is only just about 5,000 megawatts. So in a country where you can produce about 14,000 megawatts, at the end of the day, you can only produce less than 5,000 megawatts. I mean, so that shouldn't be. And investors are not coming in to come and invest in transmission infrastructure because of the current challenges we have as regards subsidy and illiquidity. So if the government can work on this, then we can see an improvement in the power sector in Nigeria.
Well said. Let's finish it up as always in North Africa, because the World Bank is giving Egypt $400 million to support the country's health insurance sector. And the Minister of Finance in Cairo says if they get included in the FTSE, then that could bring additional $4 billion into Egyptian bonds. That's quite good business. EBRD, which is your European Bank for Reconstruction and Development, is lending QNB Al Alhi $50 million for renewable energy projects across the country, and that's as Morocco financing needs to reach about 82.1 billion dirhams in 2021. Ali, let me just get your thoughts very quickly on the Egyptian story.
So I think the big story is the FTSE inclusion. And if they can suck in $4 billion of new investments into the bond market, you're going to see a significant move lower in interest rates. And I think you will then create a positive feedback loop for Egyptian assets. So no wonder they're pretty excited by that, as anyone would be. And I think most of us would be excited if there was an influx of $4 billion of new cash into our capital markets. It would make a significant difference.
Luke could be happy if Nigeria could lay hands on $4 billion US in the bond market.
He's smiling.
He's going to be smiling all the way. $4 billion, extra liquidity, fresh money. That's going to be. Go ahead, Ali. Sorry.
And this is a culmination of what had been intelligent, coherent policy making in the economic docket, and that's the outcome that we should be taking to our finance ministers and saying, get it right. This is what's going to happen, and you'll be a winner. Now, can I just go to the Morocco story? Treasury's finance needs to reach 82.1 billion dirhams in 2021. I've been looking at Morocco recently. We had this major escalation in the Spanish enclaves, which are the closest Europe-Africa border, where Morocco was accused of sending 8,000 of their citizens into that enclave to put pressure on Spain, who had received the leader of the Polisario Front, Ghali. The Polisario Front, of course, had been fighting for the independence of the Western Sahara. And then there were concerns that you were going to have a major escalation in Spain-Morocco relations. Morocco has actually, until that point, clamped down very hard on the border. They've taken a very hard-line stance on, illicit trading, cigarette smuggling and stuff, and the people in that area of Morocco have been hit with a very bad economic recession. Overall, Morocco poverty levels have gone up in the last 12, 14 months quite badly. So, Morocco is looking to be this bridge between Europe and Africa, but at the same, and it has done a tremendous amount in industrialization, particularly in the car auto sector, but essentially it does need capital now to kickstart the economy and to deliver for its citizens. Otherwise, you could see more unrest. Just to finish off with a quick point, you were talking about inflation. Food prices are at the highest they've been since 2011. So some of those numbers I'm seeing are surprising to me. 1.5%. If you look at the overall food inflation basket, 2011 highs. We remember what happened in 2011. A lot of people reckon that the revolutions that we saw in the Maghreb were because of people's not being, bread, I think, was one of the key words of those. So it'll be something we've got to keep an eye on. And I for one, am confused as to how some countries seem to be managing this much better than yourselves in Nigeria, where your food inflation number is 24, 25% or something, which seems a huge number in a country where people have a limited amount to spend.
Interesting. Luke, give me to round this off for me with your thoughts on what else does Nigeria, what else do we need to tweak to get $4 billion into the treasury space, into the bond market?
At the end of it, everything just boils down to what the CBN is interested in doing. But for right now, we do not think foreign investors should be interested in channeling funds into the country, given what they experienced last year. At the onset of the pandemic, there were fears that the naira could be devalued. So a number of these investors wanted to run for safety, but unfortunately for them, they could not leave the country as and when due. As a matter of fact, till now, some of these foreign investors are still stranded in Nigeria. So right now, if you're seeing any improvement in both the equity and the fixed income markets, that improvement is not driven by fresh inflows. Rather, is driven by investors who have been stranded and they just feel like, there are still upsides in the fixed income market. Let me deploy my money into these markets. till the CBN will be willing to give me access to dollars. When that happens, then I can just leave the country. For other potential investors, I mean, that's already a big red flag that none of them right now is willing to come and invest in the country. Before we can see that level of inflows back into the country, then the CBN must have done something quite sustainable about managing the FX rates in Nigeria. And to start with, you need to significantly reduce the spread between the NAFEX rate, which is now the official rate, and the parallel market rate. When this happens, then maybe we might see renewed foreign investment in our capital markets.
Okay, let's leave it there for today. Thank you so much, Luke. The latest was that the central bank is thinking of a digital currency between now and the end of the year. Ghana is just made a similar announcement this week. So let's talk about digital currencies next week sometime. Thank you so much, everyone. Have a great weekend. Alikan Sachu in Nairobi and Luke Ofojebe from Vertiva Capital. Thank you both. We appreciate your time. See you next week. Bye for now.